I have shown you guys how this strategy absolutely demolishes the market on the 1 minute time frame. So what happens when we take it up to the next level and use multi-time frame analysis? Let's find out. This is the checklist we are going to be using, which has a little twist as compared to what we normally use on the 1 minute time frame, and I'm going to explain. First step, draw a vertical line at 8:30 and 11 New York Standard Time on the 15-minute time frame. So this remains the same on what we used to normally do on the 1 minute time frame. Then secondly, we draw a horizontal line on a swing high and low nearest to price on the 15-minute time frame. Step 3, when the high or low is broken, we drop down to the 1 minute time frame to look for a trade setup. So this is what we normally used to do when we're on just the 1 minute time frame. Now, with the little twist we have, instead of just dropping down directly to the 1 minute time frame, we are going to simultaneously drop from the 15-minute to the 5-minute to the 3-minute, then to the 1 minute time frame. So as we are dropping down, what are we going to be looking for? And that is where step 4 comes in. We are going to be waiting for an impulsive move that forms all of this, takes out a low or a high and forms a fair value gap, forms at least 2 opposite candles before the move, and has a displacement greater than 25 points. So this is what we are going to be looking for on all the different time frames that we are going to be dropping down to. So we are going to be using only the 1 minute, the 3 minute, the 5 minute, and the 15-minute time frame. So we'll be looking for all of these setup requirements on these different time frames that we are going to be looking for, and the displacement remains the same. So the same displacement which we are looking for, that is greater than or equal to 25 points on the 1 minute time frame, we are also going to be looking for it on the 3 minute, on the 5 minute, and also on the 15-minute time frame. Then after that, we go to step 5. We draw out the fair value gap formed and wait for price to return. Step 6, we place a limit order at the fair value gap with a stop loss above or below it. Now this is where we have another twist to this checklist. Normally we are just going to place our entry at the fair value gap, that is when we were doing it on the 1 minute time frame. But now that we are doing it on the 3 minute, on the 5 minute, and also maybe on the 15-minute time frame, what we are going to do is we are going to draw out that fair value gap like what we do on the step 5. But then we are going to drop down now from there to the 1 minute time frame, and that is where we are going to be taking our entry. If you're not understanding, don't bother, I'm going to make you understand when we get into the charts. The last step, which is step 7, we target the negative 0.5 level on the fib for TP. Just like I said earlier, we start on the 15-minute time frame, and we start by demarcating our zone, that is from 8:30 to 11 New York Standard Time. The next thing is to draw horizontal lines on the nearest swing high and low to price. So this is the nearest swing low that we are going to be expecting price to most probably trade below, where we can start looking for our trading setup. And this is the recent swing high that we'll be expecting price to trade above. And when price does any of that, we drop down to the consecutive time frames where we are going to be looking for our trading setup that follows all the rules that I explained. So as you can see, the high right here has been taken out. With this, we can now drop down to the 3 minute and the 1 minute time frame where we are going to be looking for our trading setup. Today's trading setup actually formed on the 3 minute time frame. So that is why I'm not going to be going to the 5 minute time frame, but I'll just go directly to the 3 minute time frame where I'm going to show you the trading setup that was formed. On the 3 minute time frame right now, we are going to start looking for all our rules that have been followed. And as you can see right here, there is some sort of a setup that has formed and actually follows a couple of our rules. You can see at least 2 bearish candles before the impulsive move, and the impulsive move actually took out this high right here. The only reason why this impulsive move was invalid to me is the displacement. You can realize that the displacement on this bullish candle was just 17 points, and I need my displacement to be at least 25 points, because that is one very crucial rule in this strategy. So that is not going to be a trading setup. And as you can see right here, if we had taken it, we should have been hit already out of the trade. That is a very crucial rule, and all the rules that I've actually given are very crucial, and they are supposed to be followed perfectly if you want to see the results that this strategy gives. Okay, looking at the charts right now, you can see we had at least 2 bullish candles. We had a very nice bearish impulsive move that I bet you was greater than 25 points, that is 60 points, and that impulsive move took out this low. The reason why I'm not going to be taking this as a setup is, if you have been watching my previous videos, I say I want candle 2 and 3 to be the same. So if candle 2 here is bearish, because this is going to be a bearish setup, I want candle 3 as well to be bearish when forming this fair value gap. So with that, this is not going to be a setup that I'm going to take. And also you can see the displacement is just too wide, and if we're going to be taking this kind of a trade, our stop loss is also going to be wide as well, which will not give us a very good risk to reward management. I can see something very nice is also forming here on the chart right now. You can see at least two bullish candles that have formed, and you can see a good impulsive move that has formed, and it took out this previous low right here. Now we can see that according to me right now, I don't think this setup has actually formed perfectly yet, because I always measure my displacement based on the candle that was formed within the fair value gap. This is the fair value gap here, right? This is the low of the first candle, and this is the high of the third candle, and this is the candle that is between the fair value gap or within the fair value gap. So that is the candle that I want to use to measure my displacement, and we measure based on just the body of that candle. The displacement on this candle alone is just 24 points. So that means it has not yet met that criteria. One other thing that I'm going to be looking forward to is if another fair value gap forms here, so that what we are going to be doing is we are going to use this higher candle that is within this fair value gap, and also this other candle within the second fair value gap as our displacement. So it can maybe give us, as you can see here, a 65 displacement, which is going to be big enough for what we are expecting to see. There we go. You can see now here we have two good fair value gaps, the higher fair value gap and this lower fair value gap. And if we are to look at the displacement from the body of the higher fair value gap to the body of the lower one, you can see we have 65 points. So that already has met our rules. Now another thing we do is we draw now the Fibonacci, right? The Fibonacci from the high to the current low in price right now. And normally what we always do on the 1 minute time frame is we normally look to take our entry right here from the 0.5 level of the fib, or that is the 50% of the range. But then we are going to be doing it differently, since we are trading now on the 3 minute and we are dropping down to the 1 minute time frame. Now we are going to be dropping down to the 1 minute time frame, where within this fair value gap where we have our 50% range, we are going to be looking for another fair value gap that has formed within that zone, where we are going to be taking our entry, and still we'll be taking our take profit based on the negative 0.5 level of the 3 minute zone. Here we go on the 1 minute time frame, and just like I said, we are now within that higher time frame, that was the 3 minute fair value gap, and we are looking for another fair value gap that has been untouched. This is the first fair value gap that price formed within that zone that price has not traded back into. So this is the fair value gap that we are going to be using as our trading zone based on the 3 minute setup. So now we are going to place our trade. As you can see, I placed my entry at the high of the third candle and my stop loss at the high of the first candle of this fair value gap that is within the zone. Based on a backtesting that I've been doing, whenever price is coming back into the zone, price is not going to go above the first candle of the fair value gap that was formed within the bigger fair value gap zone. If price actually gets back there, then that means our setup was invalid. You can see price kept on going down a little. Now we are going to go back to the 3 minute time frame to make sure that price does not form other fair value gaps, and we can use this now to extend our range. So you can see we can extend our range of the fib a little bit lower since price has gone down lower, but you can see the 50% is still within this fair value gap. So now we go back to the 1 minute time frame. Price has started coming towards our zone, so let's see how price is going to play out. Right here we have been tagged into our trade, and as you can see, our trade is a 1:4 because we have been using the higher time frame fair value gap zone. We drop down to the 1 minute and look for a smaller fair value gap within that zone, where we took a very nice entry with a smaller risk but with the reward based on the 3 minute time frame. This takes our trading strategy to another level with greater rewards, because normally when we are trading on the 1 minute time frame, we always have a risk to reward averaging around 1:2, but now you can see just with the 3 minute time frame we have already a risk to reward which is 1:4. So think of it, having a trade maybe on the 5 minute or the 15 minute, it just takes our risk to reward or our profit potential to the next level. Price got into our zone, came out, came back in. ICT always says we should not always take our stop loss to break even, but there is a rule I have in my strategy that allows me to take my stop loss to break even at a particular point. And as you know, this was the range that we were looking out for. And normally whenever price gets below this low, I always take my stop loss to break even. But based on this trade, since now we are not trading just on the 1 minute time frame, we are trading from the 3 minutes to the 1 minute, I will not be taking my stop loss to break even. Price actually went below the low that I normally always take my stop loss to break even. So at this point, normally I should have taken my stop loss to break even, but I'm not going to do that. I'll just be waiting for price to get to my take profit. The manipulation in price was really wild. You can see price came into our zone, played for a while, went down to where we normally should have taken our break even or put our stop loss at break even. Then price has come all the way back into it, and price was just a few points away from getting to our take profit. So at this point, let's just continue waiting to see what price is going to do. After coming back to our zone again for almost like the 4th or 5th time, price has started going down all the way again and took out the previous low. So now I want to believe that price is going to get to our take profit. Price has actually gone to our take profit, and this was a wonderful 1:4 trade. And definitely I'm not going to be showing you something that I actually did not take myself. I actually took this trade myself, and I'm going to show you the screenshot here right now. But the only twist is I actually posted this on my community post. I was not in the trade when price went to my take profit because I had put my stop loss to break even. Price came all the way, took me out at break even, but price went all the way to our take profit. So maybe in the future when I'm going to be doing this multi-time frame analysis, I'm not going to be putting my stop loss back at break even, but that is something that I need to maybe back test more to see how price is going to play out in that range. But you can see multi-time frame analysis with this strategy has just some amazing results. This is just one of them, and actually 2 of these kind of trades formed within this week. Another thing that I want to show you guys is how precise our trading strategy is. Looking at this chart for yourself right now, you can see immediately as price hit our take profit at negative 0.5 level of the fib, price literally turned away and started going in the upward direction. That is to show you how precise this strategy is. And this is a model that I developed after several hours of backtesting. If you have enjoyed this video, then I want to believe you're also going to enjoy this video where I'm showing you how to trade this strategy on the 1 minute time frame with 7 easy steps that are just a little bit different from this one. So click the video right now on the screen and I'm going to see you there. So with that said, catch you guys in the next one.